8.1% in the previous month. This is a result of the reimposition of stricter quarantine to curb the spread of the Delta variant and adverse weather conditions. The reimposition of stricter quarantine, particularly in the National Capital Region, was one of the factors that led to lower business confidence in the third quarter survey. Although businesses are more optimistic for the last quarter of the year and in the next 12 months. On the other hand, consumer sentiment continues to improve due to expectations of availability of more jobs, higher income, and government policies and programs aimed at addressing COVID-19 related concerns. The country's year-on-year headline inflation decreased to 4.6% in October 2021 from 4.8% in September, bringing the year-to-date average inflation to 4.5%. This is above the government's inflation target of 3%, plus or minus 1 percentage point for 2021. Now, the latest CPI, Consumer Price Index outturn, is consistent with BSP projections that inflation could remain elevated in the near term before decelerating within the target range by the end of the year. Meanwhile, inflation expectations remain firmly aligned with the baseline projections path for 2022 to 2023. Results of the BSP's survey of private sector economists for September 2021 showed an elevated mean inflation forecast of 4.3% for 2021, but this is projected to fall within the target range of 2 to 4% at 3.2% for both 2022 and 2023. Liquidity in the financial system remains ample, expanding by 8.2% year-on-year in September 2021. This was faster than the 6.9% growth recorded in August, and on a month-on-month seasonally adjusted basis, M3 rose by 1.3%. Credit activity also increased 2.7% in September 2021, up from 1.3% in August. The continued growth in outstanding loans of universal and commercial banks reflects the modest recovery in banks' overall lending attitudes and improved economic prospects. While the gross NPL ratio of the Philippine banking system stood at 4.5% in August 2021, which is higher compared to 2.8% a year ago. The uptick was accompanied by a loan loss provisioning with an NPL coverage ratio of 83.5%. Despite the recent increase in NPLs, the Philippine banking system remains well capitalized. As of the second quarter of 2021, its capital adequacy ratio, or CAR, is at 17.2%, well above the 10% minimum threshold set by the BSP and 8% set by the Bank for International Settlements. Meanwhile, the country's external sector remains manageable. The country's exports and imports of goods increased by 21.3% and 31.6% respectively. Cash remittances from overseas Filipinos are also strengthening, with 5.7% growth in January to August 2021 from a 2.6% contraction in the same period in 2020. Meanwhile, the BPO sector remained a bright spot despite the disruption to business activities around the world. In the first 7 months of 2021, net foreign direct investments, or FDIs, increased by 43.1%. This is due to positive foreign investor sentiment on the country's macroeconomic fundamentals and strong growth prospects. The country's outstanding external debt also remains at a prudent level as its ratio to GDP slightly eased to 26.5% in the end June 2021. Notably, a large portion of our external debt has medium and long-term maturity profile and carry fixed interest rates. These support a manageable debt repayment schedule, and foreign borrowings are less susceptible to volatilities in global interest rates or foreign exchange fluctuations. The gross international reserves, or GIR, stood at $106.6 billion as of September 2021. We'll continue to provide more than adequate external liquidity buffer. The GIR level is equivalent to almost 11 months worth of imports of goods and payments of services and primary income. This level far exceeds the 3-month conventional reserve level considered as adequate. Let me now go to the policy responses of the BSP to support the economy during the pandemic. First, were measures to boost market confidence and availability of low-cost credit resources, such as cuts in the policy rate and the reserve requirement. Second, were extraordinary liquidity measures to the national government to help fund the pandemic response measures. These include provisional advances to the national government, purchases of government securities in the secondary market, and direct remittance of advanced dividends to the national governments. Third, were regulatory and operational relief measures to maintain stability of the financial system and ensure public access to financial services. We counted loans to micro, small, and medium enterprises as compliance to the reserve requirement, increased the single borrower's limit, and raised the ceiling for real estate loans. On micro, small, and medium enterprises, we recognize the crucial role of MSMEs in the economy. And let me discuss the regulatory and relief measures that the BSP has implemented to support them. One is allowing the new peso-denominated loans to MSMEs and critically impacted large enterprises that do not belong to the conglomerate as eligible instruments for compliance with the BSP's reserve requirement. For the week ending 23 September 2021, the banking system allocated an average of 196 billion loans for MSMEs as alternative compliance with the reserve requirements. This level is a substantial increase from the 8.7 billion average MSME loans that were reported for the week ending 30 April 2020. The latest level is equivalent to 13.3% of the total required reserves from 0.6% on 30 April 2020. The Monetary Board also approved prudential measures to assist macro, small, and medium enterprises. The regulatory capital treatment of MSME exposures was amended to temporarily reduce the risk weights of loans granted to MSMEs. The implementation of the revised risk-based capital framework for banks was also deferred from end 2021 to end 2022. The period of relief on the reporting of past due and non-performing loans of borrowers affected by the pandemic was also extended to 31 December 2021 from the original timeline of 8 March 2021, subject to reporting to the BSP. Now let me go to BSP's policy rate. Given a manageable inflation path, the BSP has kept the key policy interest rate at 2% in its recent policy review on 23 September 2021. As of 14 October 2021, The BSP's policy and liquidity easing measures have injected an estimated 2.3 trillion pesos, or approximately 46 billion US dollars. This is equivalent to 12.8% of the country's full year nominal GDP for 2020 as of 14 October 2021. The BSP believes that sustained monetary policy support for domestic demand should help the economic recovery gain more traction. Looking ahead, the BSP affirmed its support to the economy for as long as necessary to ensure the country's strong and sustainable economic recovery. Moving forward, the BSP's actions and policy thrust will continue to be anchored on its core mandates of promoting price and financial stability. Towards this end, the BSP will continue to pursue appropriate policy actions responsive to the needs of the time. On monetary policy, the BSP will remain vigilant over the current inflation dynamics to ensure that the monetary policy stance continues to support economic recovery to the extent that the inflation outlook would allow. It will carefully scan the operating environment with a forward-looking perspective to move in a preemptive fashion to address any risk to our price stability mandate. On the financial sector, the BSP will intensify its monitoring and surveillance over its supervised institutions to ensure that they remain resilient to emerging risk and continue to be sound, stable, and inclusive, particularly through the pursuit of enhanced digitalization. Finally, on the external sector, the BSP will remain supportive of policies that will help strengthen the economy's resilience to external shocks, including that of maintaining a market-determined exchange rate, keeping a comfortable level of reserves, and keeping the country's external debt manageable. Considering the recent economic developments and significant improvements in inoculation, we are optimistic that there is sufficient support for the country's recovery this year and in the near term. Finally, allow me to end my presentation with these key points. The country's macroeconomic fundamentals remain sound and bright spots suggest recovery is underway. The latest GDP growth suggests that the economy has started its gradual recovery. The currently high inflation is due to transitory factors. Banks remain sound, and while NPL has increased, banks remain highly capitalized. Our external position is manageable, with more than adequate external liquidity buffer and improving overseas Filipino remittances. While economic activity is improved, the overall momentum of the economic recovery remains tentative as the threat of new COVID-19 strains continues. Nevertheless, the sustained implementation of targeted fiscal incentives, as well as the acceleration of the government's vaccination program, should help boost market confidence and recovery of the economy in the coming months. The BSP believes that sustained monetary policy support for domestic demand should help the economic recovery to gain more traction. Looking ahead, the BSP affirmed its support to the economy for as long as necessary to ensure the country's strong and sustainable economic recovery. The BSP's actions and policy thrust will continue to be anchored on its core mandates of promoting price and financial stability. Toward this end, the BSP will continue to pursue appropriate policy actions responsive to the needs of the time. It will also continue undertaking a range of initiatives to create a more sustainable MSME and agricultural financing ecosystem. Thank you and good morning.
Thank you, Governor Jokno. Thank you, sir, for the very insightful lecture. May we now proceed to the Q&A, sir? Okay, so Governor Jokno, the first question we have here is, I know you've discussed this in length in your presentation, but for in layman's terms, sir, what is the general health condition of our banking system right now?
Yeah, our banking system is sound, stable, and continues to support the financial requirements of the Philippine economy. I've seen many crises in my life, and I think I can say with confidence that we learn our lessons from, for example, from the Asian financial crisis. We have issued regulations to make our banking system more stable, and so that's the system, the present system. It continues to grow in assets and deposits, and the foreign currency deposit system, trust entities, quasi-banks, and other non-bank financial institutions continued their satisfactory performance during the period under review.
Thank you, sir. Closely related second question, sir, which is, would you be able to comment right now on the current GNP, our balance of payments, and for private businesses right now, our Forex outlook? Are these things something that we should be concerned about moving forward post-pandemic?
Again, compared to previous crises, there's nothing to worry about on the foreign exchange, all right? If you remember in previous crises, whenever we have a crisis, we run out of dollars. And as a result, to stem the outflow of dollars, we raise interest rates. Didn't you notice? We cut interest rates and our gross international reserves keep on rising, okay? Because now we have more stable sources of foreign exchange. We have the OFW remittances. Last year, the forecast is that it will decline by 20% because of the global slowdown. It only declined by 0.8%, less than 1%. And this year, I think it will grow by around 7%. Okay, so that is a major source of foreign exchange. Secondly, we have the BPO industry now. Before we don't have that, right? So that's easily around another $30 billion US. Plus, there is still confidence. In fact, I just showed you the increase in FDIs, foreign direct investments, and our exports and imports are also robust. The imports has grown more faster than exports, but that's actually not bad news, but it's good news because when we import things that we produce later on and that's needed by the economy. Okay, so I think there's nothing to worry about the peso. In fact, you notice the peso is fairly stable, and it is one of the, in fact, in the last 6 months, I would say it's the most stable currency in this part of the world. All right.
Yes, sir. Thank you, sir. Our next question, Mr. Governor, is: can the Philippines regain and possibly maintain our sovereign investment grade rating in the future? Is this something that we can expect soon?
Well, I think to put your question more appropriately, we never lost the ratings. In a wave of many downgrades, the Philippines retained its rating. Fitch rating, BBB, S&P, BBB+, Moody's, Baa2, the RNI, BBB+, and of course the Japan Credit Rating Agency, we have A-. Okay, in fact they adjusted that from BBB to A- during the crisis, because it's accurate to say that the macroeconomic fundamentals of the country was really sound before the crisis. Okay, so but despite that, there's still a lot of confidence on the part of the rating agencies that the Philippines will will remain stable. In fact, it's not grossly affected by other countries where, for example, if you are heavily reliant on tourism, you'll be in deep trouble, like some of the Pacific Islands. But we have a diverse source of foreign exchange, and our economy continues to grow, although it was affected basically by the lockdowns because it restricted the mobility. And I think the government has learned, right? They just changed now the rating of Metro Manila to level 2. That's a good move, right? I think we really have to learn to live with a virus, okay? Plus we have, to me, the key now on the recovery is the vaccination program. And I keep saying that. I think we have demonstrated that we can inoculate as many as 700,000 in one single day. I think the target now is 1.5 million in one day. I think that's doable. And we have the supply. We have multiple sources. Other countries, they have only one or two sources. We have multiple sources. We have Chinese, Japanese, American, UK, right? I think if I count it, around 7 to 8 sources. And they're already here, around more than 100 billion doses. And we have already contracted close to 200 million doses. And we have funded them. There's no problem with the funding. We have raised the funding. So it's just a matter for the suppliers to deliver to us. So with this, and we can open the economy, and I think we'll be. I'm optimistic that next year we have still the third and the fourth quarter to look into, but those I think will be positive. The fourth quarter, our forecast for next year is a growth of 7 to 9%, and then we'll go back to the usual 6 to 7% in 2023, 24.
Okay, sir, I'm collating the questions, and here's another quite connected question, which is recently the central bank's financial statements for the year showed that it netted 48.7 billion over the first 7 months of the year, and this actually exceeded the 45.81 billion posted in 2019. May we know, sir, what caused this growth? Considering the pandemic last year, it's a very good news. Something that we think should be highlighted. May we know is there a reason for the growth, and what can we expect from this surplus?
Well, we have increased the asset rather of the BSP by about both on the domestic side and on the foreign exchange side. All right. So our reserves is, as I said, it's equivalent to 11 months of import. So a depreciation of the peso will actually increase our assets in peso terms, right? So that's one thing. So we earn a lot on that. Also, we have been buying a significant amount of government securities, and this is one way of stabilizing. Remember, during the first few days of the crisis, the interest rate on domestic borrowing went up. So we were actively involved in the purchase of government securities in the secondary market. And as a result of that, the interest rates on domestic borrowing by the national government has stabilized. So that's one way of helping also. One way of helping the national government to raise the amount of money that it needs to fund the COVID-related expenses. You know, one thing I think maybe my advantage as a central bank governor is I was on the fiscal side. My training actually is fiscal economics, not monetary economics. So I know exactly the problems faced by the national government at this unprecedented crisis. The revenues are down as a result of the slowdown in the economy, while expenditures are up. So you'll be facing with a huge deficit. And how do you finance that? You have to borrow money. And if the reaction of the private sector is that they will raise interest rate because that will cost the government a lot of money. So we help the national government as a result. Okay, we stabilized the securities market. So and also we gave, as I mentioned in my presentation, we advanced the to the government some 540 billion US, rather Philippine pesos, right? 540 billion. Can you imagine that? We interest free to the national government, so they can actually buy all the vaccines and spend for these additional health facilities, etc. So those are that. As a result, we have a huge amount of government securities right now, and as I said, our foreign exchange reserves has increased. So those are the sources of the increased income. In addition, under the new law, the central bank is exempted from declaring dividends in favor of the national government. But because we feel that there's a need for the national government, we declare dividends still for the national government. So all those things. So maybe out of this higher income, part of it will go back to the national government. Although, as I said, under the new law, we're exempted from declaring dividend until such time that we are able to raise the capitalization requirement of the central bank.
Thank you, sir. Now let's move on to a different category of questions here. I have a very interesting question here for the governor. Sir, do you see any effect, positive or negative, on our economy from the 1.9 trillion COVID rescue package of the US for its citizens? Is this something that might affect us?
Well, many countries actually gave out assistance to their citizens, and maybe some of them actually, to the extent that they help stabilize the situation, that will have a benefit to us. Okay, maybe also indirect, but in an indirect way. Okay, maybe to a small extent. So if a Filipino who is a resident of the US got some assistance from the US government, he maybe out of the goodness of his heart, he will send some money to his relatives here in the Philippines. So that could help a little bit. But no, the impact of that is indirect. It will, the 1.9 trillion COVID rescue package of US citizens, and also in the Euro community, I think that will help the citizens of those countries. But since we are in this together, a stable global economy also helps us in a way.
Thank you, sir. Now let's move on to a lighter topic, Mr. Governor. Right now, the national ID system is being implemented throughout the country. Is this something that will help ease doing business or doing banking here in the Philippines? Will it affect the BSP in any way?
Yeah, definitely. In fact, we are a strong advocate of the national ID system. As you know, if you want to open a bank account, they will, as part of the KYC requirement, know your customer requirement, they will ask for 2 valid IDs, okay, not nationally issued. Now, with the national ID system, you just need 1 ID, and that will replace a lot of other IDs. Okay. As you know, this national ID system was a long time coming. It was first initiated during the time of President Ramos, and finally it was approved. And so I remember when I was still in the cabinet when this was being discussed, and I said, I think the central bank should print the national ID, so that because in this country, whenever you have a bidding process, the losing bidders will sue the winning bidders, and it will be the end of the case will go up to the Supreme Court, and it will take forever. So I said, just give it to the BSP. Little did I know that I'll be here I'll be the next central bank governor. So we're actively doing the printing. And one other thing is that we work closely with land banks so that as soon as the ID is issued, the land bank will also issue an account for the new. Especially this is useful for the beneficiaries under the 4 Cs of rather the Pantawid program. So this will be a key financial inclusion enabler. Let's put it that way, as it addresses the oft-cited challenge of lacking proper ID and catalyzes innovative digital finance products. So this national ID will be a big help in our financial inclusion program.
Yes, sir, I agree. It will it will give a reprieve for a lot of our countrymen who are unbanked right now. No? Sir, again, let's move on to a different topic. A very, very trendy topic right now, worldwide. It's dealing with the digital economy. Mr. Governor, what is the role of the BSP in realizing the digital economy as we move forward, and how will it benefit MSMEs?
Well, when I assumed office, I made clear my vision of BSP. I want the society to shift from a cash-heavy society to a cash-light society. Of course, the ideal is we'll have a cash-less society, but that may not happen within the next maybe decade. So, and I said that at least 50% of all retail payments should be in digital form by 2023, and that at least 70% of all adult Filipinos should have a financial account. That's our target. And I think the numbers say that as of end 2020, at 20%, 20.1% of digital payments are already, retail payments are already in digital form. And I guess the pandemic has become a major catalyst for the adoption of digitalization, okay, in this country. Now, how would it help the micro, small, and medium enterprises? We have what is called now the QRPH. We standardized the QR, quick response, and it worked. We tried it P2P. Now we were also adopted the QR person to merchant. And by that means that you now can pay your market vendor or the sari-sari store or the tricycle driver or the jeepney driver with the QR. Okay. So hopefully that will help these micro, small, and medium enterprises.
Thank you, sir. Mr. Governor, let's move on now. One of the hot topics today is the issue on cryptocurrency. Now, cryptocurrency, sir. Now, I know in my profession as a lawyer, I know the BSP has issued memorandums, advisories on e-wallets and the crypto market. But sir, personally for you, and perhaps for the BSP stance moving forward in the future, how do you view cryptocurrency? Is this something that the public should be afraid of, or is it something to be embraced, or is it a wait and see approach for the Philippine general consumer?
Well, the BSP considers virtual currencies as virtual assets, not currencies, okay, to align with the direction and definitions by the Financial Action Task Force, or FATF, that's on global money laundering and terrorist financing watchdog. Because that's, to me, that's the biggest risk here. In the context of BSP guidelines, the virtual assets are not issued nor guaranteed by any jurisdiction and do not have legal tender status and shall be broadly construed to include digital units or exchange that have a centralized repository or administrator, are decentralized and no centralized repository, or may be created or obtained by computing or manufacturing effort. But I know that there's one country in Latin America that has adopted the virtual currency, right? Now, virtual currency is distinguished from fiat currency or the real currency, which is the coin and paper money of the country, and is customarily used and accepted as a medium of exchange in the issuing country. Now, it is distinct from e-money, which is digital representation of fiat currency used to electronically transfer value denominated in fiat currency. Now, as usual, we espouse an entity and activity-based approach towards regulation and supervision. As such, activities, products, and services that fall within the jurisdiction of the BSP should be regulated by the BSP, regardless of technology platforms or mode of deployment. Regulations governing entities engaged in regulated activities by the BSP, for example, e-money issuers, virtual currency exchanges, virtual asset service providers are already in place. On the CBDC, what we call the central bank issued currency, we have made a study on that, and I think that there's no country in this part of the world that is likely to adopt that within the next 5 years. But who knows? Things are moving quite fast. So we continue to monitor the various developments regarding virtual currencies, particularly the potential risk to consumers. Should the usage of virtual currencies become more pervasive, the BSP is exploring the implementation of having its own central bank digital currency, or as what we call CBDC. But I don't see that happening in the very near future. But we have a working group just in case that we need to issue a CBDC.
Thank you, sir. Another hot topic for right now, Mr. Governor, which is, are you in favor of opening the economy to 100% foreign ownership of real properties, basic utilities, and banks? We know this is an ongoing discussion in Congress. What are your thoughts on this topic, sir? The opening of our corporations and foreign ownership basically in corporations, and possibly for foreigners to own land in the Philippines.
Well, foreign ownership of banks, we're open to that. In fact, it's already open in some sense, right? For example, Republic Act 7721 in 1994, Philippine banking and financial system was liberalized to create a more competitive environment and to encourage greater foreign participation through allowable foreign ownership in domestic banks by foreign banks and entry of foreign bank branches. There are, of course, many advantages for welcoming foreign banks because, for example, they might bring in new capital. They can also, because of the technology that may be more superior abroad, they can also bring new technology. And so those are some of the benefits that we can think of. But the Philippine banking system is currently liberalized already. And so it has resulted, for example, in inflows of foreign direct investments, employment opportunities. Now we are embarking on what is called Build program. I think the funding for that may be sourced from new foreign banks who are willing to set up here. And so they can play a big role in financing big ticket and long-term projects consistent with the government's infrastructure program. And of course, as I mentioned, they can bring in technical expertise and access to technology. So we are open to foreign banks coming in.
Thank you, Mr. Governor. Sir, that's all. Those are all the questions we have for today. Mr. Governor, any last words for our audience today, who are mostly businessmen?
Well, keep the faith. I think we're almost there. Okay, the economy is opening up. I think I welcome the recent decision to open up to Metro Manila to level 2. Maybe the whole country will follow suit, and we'll probably have a brighter Christmas. Thank you.
Thank you, Mr. Governor. Now, ladies and gentlemen, that ends our Q&A. To show CFBCI's appreciation, may I now call on the President of CFBCI, Mr. Alejandro Co, to the virtual floor. Mr. Alejandro.
Chinese Filipino Business Club Inc. present this plaque of appreciation to Mr. Benjamin E. Diokno, PhD, Government Bangko Sentral ng Pilipinas, for sharing his insightful view as a resource speaker of the topic, Multidimensional Strategy Toward Post-Pandemic Growth, given this 5 of November 2021. Signed, Alejandro Co, President, Chinese Filipino Business Club Inc. Thank you.
Thank you. Maraming salamat po.
Salamat po din.
Salamat. Thank you, Mr. Governor. Now, to formally close our event, ladies and gentlemen, please welcome the Executive Vice President of CFBCI, Mr. Stephen Chia, for his closing remarks.
Dear friends and esteemed participants from the various organizations, good noon. On behalf of Chinese Filipino Business Club Incorporated, allow me to bring this today's webinar to a close. We would like to thank first and foremost our BSP Governor Benjamin Diokno for his time and excellent presentation and discussion. We would likewise want to thank you all for taking time to join this virtually and honoring us for this enthusiasm and attention for the duration of this webinar. Ladies and gentlemen, with the impact of the pandemic in this unfolding, but hopefully it's in its tail end, we're happy to hear from our good news from our Honorable BSP Governor Diokno that the Philippine banking system is in strong position in both weather the significant economic effect caused by pandemic COVID-19 and support the country eventual economic recovery. We take note the BSP adopting prudential measures to enable financial institutions to lend to the production sectors, including the micro, small, and medium enterprises sectors, thus ensuring the survival of the highly dynamic and rapidly changing operating environment typified by the challenges that define the global economy. Thank you, Governor Diokno. We hope that today's discussion responded to your expectation and provided you with a renewed confidence in our banking system and our economy as a whole. Again, thank you very much. Hoping to see you all in our future webinar.
Okay, thank you, EVP Stephen. Now, ladies and gentlemen, our program officially ends here. Governor Diokno, again, thank you for sharing your valuable insights today. Maraming salamat po. Now, to all the participants, thank you for joining us and may you have an enjoyable weekend. Thank you and mabuhay ang Pilipinas. Salamat po.
No, sige.